Hello and welcome. You're watching Your Trades on ET now with me, Snehisha, and with me, as always, is Priyanka Opal. And we've had some recovery in today's trading session. Nifty, although, has ended below 23,200, but we've still seen a 0.5% uptick coming in on the Nifty today. Sensex also not doing all that bad for itself. 76,499, almost 76,500 is where we've touched up for today on the Sensex as well. Nifty Bank was the clear outperformer today. 1.5% uptick coming in on Nifty Bank. The broader markets have done very well for themselves. A real show of strength coming in from the broader markets today. Nifty mid cap up almost 2.5%. Small cap also up 2% in today's trading session. The VIX has fallen by 3.3%. We're below the 15.5 mark, so looking very good on the India VIX front as well. Advance decline ratio very steeply and firmly in the favor of the advances today. So real show of support coming in from the broader markets today. Sectorally, what has done well today, last couple of minutes, or rather last half an hour or so of the trading session, Nifty PSU Bank has outperformed all of these indices on the back of the news flow that the government could be allowing divestment of stake in 5 PSU banks, the likes of Central Bank, Bank of Maharashtra, UCO Bank, IOB and Punjab and Sindh. In fact, IOB was even locked up in upper circuit of 20%. Central Bank up there too, a 20% uptick coming in on both of those stocks. Healthy moves coming in on Bank of Maharashtra as well. So that was in focus today. The Adani group of stocks have stolen all the spotlight today. Adani Enterprises, your top sectoral, your top Nifty gain, a 7% uptick coming in, followed by Shriram Finance, Hindalco and Adani Ports. So these stocks have also done very well, and they were helping the Nifty stay afloat today, and that 0.5% uptick on Nifty is what we have seen today. A couple of stocks were in focus on the back of brokerage impact, the likes of BSE, you had RECPFC, lots of stocks in focus, but nonetheless, overall, it seems to have been a good day for the markets. Real show of support coming in from the broader markets today.
Actually, rupee did not slide that further. Maybe that was one positive news, but we saw that dollar index got weakened by some 40 BPS points. That's what actually helped on the global indicating funds front that we saw the market sliding yesterday. But yes, a recovery. Is there a technical rebound? We'll understand from Nilesh, and who joins us on the show later in couple of minutes from now. But yes, the way Snehi was highlighting, few of the counters which completely reacted on the brokerage note was BSE. Jefferies did an upgrade on BSE from hold. They see that earnings upgrade will be one key trigger. Plus, brokers will have to take a price hike basis what we have seen, the kind of changes we've seen in past few months on the front of the F&O measures by SEBI. That was buzzing. Biocon and HSBC upgrade was buzzing. Power Financier, first the Macquarie, and then ICICI Security. And there was one more trigger on the NPA recovery news. That was because of which these stocks were buzzing in trade today. But of course, the kind of impact we saw on HCL Tech, 9% stock was down. Maybe one reason could be it was a profit booking because IT stocks have run up so far. Also, that the commentary for the future quarters were not that promising. What traders could read in between the numbers, and we saw that HCL Tech was reacting to it. But the good show by Angel One, good numbers on Q-on-Q basis. Anand Rathi also did reacted on the earnings news. Now, but let's understand that is this only merely a technical rebound, or is it is there more to read to what there could be a follow-up recovery also. Nilesh Jain joins in, but just a correction, Anand Rathi Angel One did not react much, though the quarter-on-quarter basis the numbers were not that bad. Nilesh, what do you make of the recovery that we saw in the markets today? Was that, can we call it we were too much in oversold zone, it was a technical rebound, or has the really needle moved towards the positive side?
So Priyanka, after 4 days of consecutive decline, the markets have gone into extremely oversold territory, and today we have seen a technical rebound. I would say a dead cat bounce. That was mainly seen in the broader markets. The benchmark indices, although witnessed some consolidation as far as Nifty is concerned, Bank Nifty was one of the outperformer as well. But it looks like we are not out of the woods yet. This is merely a pullback. Till the time Nifty does not reclaim 23,600 mark on the upside, there are high possibility of this pullback might get sold into. So as of now, a caution is advised, and it is advisable to keep booking profit at the high levels. Do not take any aggressive long position at current juncture. But yes, stock specific action is something that we expect is likely to continue. If market consolidates from here, then the broader markets are likely to outperform. So Nifty mid cap, Nifty small cap, both the indices have witnessed a strong rebound, and reversal candle can also be seen on the chart. So there could be possibility of follow-up move in the broader market. But yes, we expect indices, the benchmark indices to consolidate. And yes, of course, we are bullish on Bank Nifty for further pullback towards 49,500 to 49,700. Today, the VIX declined, and that is certainly a positive sign. It has ended below 15.5, and a further drop will definitely help the index to pull on the high side. So as of now, it looks like we may see a follow-up move tomorrow or maybe for a day or two, but a caution is advised.
Okay, so that's the word coming in from Nilesh. Nilesh, amid a market like this, it is definitely a stock because market right now, because some pockets are doing pretty well while only some are beaten down. Where are you seeing value amid a market like this, and what would your picks and recommendations be for our viewers?
Right, so we are looking at financial as a whole, as we have seen a lot of underperformance in the financial space, a lot of short buildups were piled up in the banking space. So in that area, we expect a short covering move to continue, and also NBFC space as a whole is looking positive. Within NBFC space, a couple of stocks that are on a radar. First of all, Chola Finance, this particular stock is looking positive. Today, we have witnessed a strong rebound. Good part is that today we have witnessed a build-up on the long side on derivative front. So we expect a follow-up move in Chola Fin towards 1300 to 1340. Stop loss can be placed somewhere around 1245. Apart from that, Bajaj Finance is also looking positive for a follow-up move towards 7500, 7200 should be the stop loss. Apart from that, Polycab is another stock where we can see on the daily time frame chart, the stock has taken a very strong support near about 6300 levels. So we can expect a follow-up move towards 6600 to 6700. Stop loss can be placed somewhere around 6300. So apart from that, within PSU banking space, today we have seen a strong move. So State Bank of India is something that that is looking attractive at current level from a position perspective as well as from a trading point of view. We can expect a follow-up move towards 765 to 770, and 738 should be the stop loss in State Bank of India.
So two trades on the buy side, Polycab as well as SBI. Thanks very much, Nilesh, for that view on the markets and your recommendations. Moving on, beginning of the new year, and we did caught up with whole host of top market voices on what themes they think will play out in 2025. From Sandeep Tandon to Gautam Trivedi to N. Jayakumar and to Rahul Chadda. Let's listen in what is keeping them positive on these sectors.
I'm constructive on the utility space, very constructive on power space till 2030-32. That's an area which I will like to give. FMCG has potential to come back. Staples have to come back. Given the government stress on this space, we expect some amount of, if I not say freebies in that sense, but some amount of soft corner is there that money will shift from larger infra projects to some of these schemes. So that's the one area of concern, and plus crop has been very good. Rural economy is coming back after 4 years, so we are constructive on FMCG space.
Travel and tourism continues to be strong. It's been great for the past 2 years. Real estate, I think, has still a couple of more years of legs left in them. And my view is that as we get closer to a 5-year cycle of the real estate sector, of real estate development, where people will actually get keys and move into their apartments, you will see a big spurt coming in everything that a new home needs.
No better place to invest in, to my mind, than the financials, which would probably lead the next rally. Other than this, the dollar rupee move, which I think is on a near permanent basis in that sense, will benefit pharma in a big way. Even the IT space could benefit because part of it, the gains will get passed on to the end consumers, but the IT space could also benefit from the tailwinds here. Other than that, the India manufacturing story, the India PLI story are themes which in the central space along with financials will continue to be the place where money could come in.
This whole manufacturing, this whole industrialization, this whole investment in the power capex is a real story. See, we are seeing it globally. The demand for power and infrastructure rollout has improved significantly, and outside China, not many countries had invested in the space for last 10 years. So I think that's something one would like to buy on everyday clients.
Okay, that's the word coming in from a bunch of experts on where they see the markets headed and which sectors they are liking the most at now. But on that note, we'll slip into a short break and keep you updated with everything that happened in the market and bring you more stock-specific news and updates on the other side of the short break.
Welcome back. You're watching Your Trades on ET now. Now let's get you the action from the derivative space. What we saw that the kind of recovery it played out in the market. It was short covering trend on Nifty as well as on Bank Nifty. VIX was around 15. It was above 15 today. Of course, the kind of move we've seen, there was a good part of recovery, but there is still seems to be the market can climb the wall of worry or not. Let's see, because the maximum call writing which is taking place on the strikes of 23,300, 23,400, that's exactly the point what Nilesh was also marking, that till the time market indices, Nifty especially, doesn't cross this level, there could be this rally could be just short-lived, or maybe it might go down the drain. But then the call writing which happened at 23,300, 23,400 make it the toughest resistance, the immediate resistance also. At the same time, there is some base towards the downside. We have a base at 23,100 and even 2300. 23,000 happens to be the base because the maximum of the put writing has happened. So it seems there is at least a support in the market. If there is a resistance, maybe are we in for a consolidated session? We'll have to watch and watch.
We finally do have some visibility on a support after so many trading sessions, so that seems to be positive. So 23,000 on the downside and 23,400 on the upside is the next key hurdle for the Nifty to cross. But on that note, let's also revisit the big story of the day, and that happens to be the IT pack, because that pack was the biggest sectoral loser, with only Wipro ending in the green, just about 0.1%, very flat move over there. However, the one that we wish to highlight from the IT pack, the one stock, is HCL Tech, because what a nosedive that stock is seen in today's trade, down about 9%. That's why the stock is closed today on the back of an inline set of Q3 numbers, but very weak management commentary coming in and a couple of downgrades coming in from brokerages as well. My colleague Ansh is joining us with a lowdown of what the Q3 numbers look like and what the management exactly had to say that has got the stock spooked to this extent today. Ansh, take it away.
Now, while the results were in line with the expectation, management commentary was mixed. Management highlighted that larger deals are taking time to convert. They are taking more time to convert actually. Now, this could have an impact in the revenue visibility in the near term. Also, management admitted that the software segment performance was below their own expectation. Now, this has raised concern about its growth momentum. Also, management mentioned that rupee weakness could have an impact on their financials. Apart from this, we are seeing that many brokerages have downgraded the stock, like Novama has downgraded that rating to hold, saying FY20 EPE ratio is around 28.6 times, which appears full. Apart from this, if we see the chart of its peers, then this stock has already run up way too much compared to its peers. Now, these are the reasons why the stock is falling today.
We delivered a very good quarter. Our Q3 was strong. Of course, the software business has a seasonality which delivered almost 18% sequential growth. And services business also delivered a strong growth of 2.2%. And we expect the momentum to continue in Q4, but there would be some moderation in some of the large projects coming to an end and anniversary impact of some of the large deals. Factoring all that, overall full year guidance, we provided 4.5 to 5%. A 1% increase in the lower end of our guidance. Our pipeline is quite strong. It's almost near all-time high, and it is well diversified pipeline across verticals and geographies and service line.
Okay, so traders clearly reacted on HCL Tech. We've seen a 9% cut coming in on HCL Tech. But then moving on, let's get to the other stocks that were buzzing in trade today. Ravinder is standing by the list of those stocks. Ravinder.
Well, Greaves Cotton is in focus, where company's subsidiary Greaves Electric Mobility has launched an electric scooter Amper Magnus Neo at 79,999. Moving to next, Container Corporation of India is also in focus on back of Q3 business update, where company's total throughput was up by 11.6% year-on-year basis at 12.84 lakh TEU, which is 20 foot equivalent unit, and the EXIM throughput was 8.1% year-on-year basis. Moving to next, Power Financial stock is also on focus on back of note from ICICI Security, where they have initiated a coverage with buy rating on PFC and REC with target price of rupees 550 for PFC and 600 for REC. They say that the 43 lakh crore generation and transmission pipeline to drive financiaries growth story, and the energy transaction funding is a key trigger. Both company has a 20% market share in power financing. Moving to next, Pinamal Pharma is also in focus, where Life Healthcare Group Holding has signed a binding agreement to sell Life Molecular Imaging, a subsidiary of Pinamal, and upon completion the company is expected to receive approximately $140 million, and the additional amount may be received in the coming year from eligible profit. And lastly, on back of brokerage note, Biocon is also in focus, where HSBC has come out with a note on Biocon, and they have upgraded the stock to buy with target price of rupees 430. This says that the company expect to see an operational turnaround driven by the key biosimilar launches and recovery in generic losses, and the multiple factors likely to boost companies' earning in futures. And the FDA clearance for Malaysia plant resolved the GMP overhang.
Okay, well, Ravinder, thanks so much for joining us with all of those buzzers in today's trade. Angel One also want to talk about a 3% cut coming in on the back of poor numbers sequentially. But on that note, we'll wrap it up on this edition of Your Trades. From Priyanka, me and the team that put this show together, thanks so much for watching.
If you like this video, then like, share and subscribe to ET Now.